Hey, Steve here with the Trading with Goals series. In this video, I want to talk about why trading with goals is important. When you trade with a specific goal in mind, it focuses your trading tremendously. For example, my stock trading accounts for my kids, the goal is to find one stock to go up 50% per year. I invest their entire account in that one stock. Once it hits that number, I bail out of the stock and move on to the next one. Now, I don't have a college fund for my kids. I don't actively save for that. I'm in the camp where they can pay for college themselves or scholarship, trade schools, whatnot. But my thoughts aren't necessarily yours, but this is what I'm doing. So, though it isn't a traditional college fund, so to speak, it is a savings plan. They each started with $500, though I started them all at the same time. So my 7-year-old has less time than my infant does for the account to grow. But each account will be invested in the same stock each time. Obviously, with starting with $500 and never putting another dime, the investing would have to be aggressive to amount to much of anything. But I felt it would be a fun experiment for me and educational down the road as my children grow and hopefully see and give input on the investments that they would like to see. So my goal is to make 50% per trade and trade that until year 18 for each child. Maybe it's 25. Haven't nailed down that part completely yet, as it will be determined based on the kid's interest if they go to college or want to start a business. But I know for sure for the next 10 years. So 50% profit to potential each trade is the goal. Trade it for at least 10 years with the goal of a college or life fund for my kids. The rules of my investment is to exit the position if it goes down 30% and exit the position if it goes up 50%. And each of my children will be invested in the same investment, so they all win or lose at the same time. I can then know that if each year I produce 50% profit, I can figure out what amount I'll have in the account for each child after a specific year. So if one child goes to college in 10 years and I produce 50% per year, they would have $28,000 in their account. If another child doesn't need it for 15 years, they would have $218,000 in their account. If another child doesn't need it for 20 years, they'll have over $1.6 million. Now let me say this. This is the math of the goal. As you saw in my StockDoubling.com example in a previous video, yes, it's possible on paper, but this is the real world, and who knows what's going to happen. Am I going to stick with this plan? Some of the stocks will be bought out for more or less than the 50%. Actually, the first stock that I entered for my kids' account, this actually happened. I was looking for a 50% return. The company actually got bought out, and it ended up being about I think 65 or 75% return. There was no way for me to exit the position at 50% because they said I'm going to buy out the stock at such and such a price, and I was in profit by about 65%, and the stock automatically overnight went up to that amount. So those are going to happen. So I'm already at a different percentage than 50%. But what these goals do is focus your decision on that specific goal. I'm not going willy-nilly and just getting into a particular stock just because I think it's going to go up and then getting out because I think this one is a better investment, and so forth and so on. I have zero interest in putting my money to work in a mutual fund. I have zero interest in adding more and more funds like many parents do. They have a general thing where every month they deposit some money into their kids' college fund. I have no interest in that. That isn't my goal or my wants for this project. I have a specific goal that works for me and my family. Will it work out in the end? I have no idea. Nor does the person who invests in a mutual fund or retirement or hoping for a pension does it either. But what this goal does is, for me, is eliminates a lot of the noise. Since I have that specific goal of 50% for one stock for 1 year time frame, I don't even bother looking at stocks that have no potential to move that much in a year. It clears out all the clutter and makes me laser focused on the potential stocks that can get me to my goal. Also, with a downside risk of 30%, which is part of my rules, even if I think the stock has potential to go up 50%, but I think the downside is 50 or 60% as well, I won't touch that stock either. With those specific goals in mind, in theory, it lessens my risk, at least in my mind. I'm not jumping into any stock just because I feel it's undervalued or I think it can go up. I only focus on the ones that have a 50% reward to 30% risk factor. I know I'm talking a lot about stocks here, but this can be applied to any type of trading, whether it's binary options, stocks, futures, forex, or whatever you decide to trade. With the 50% profit rule, I want to make sure that I'm out of it even if it hits that number. Even if I think it still has potential to go up even more, I'm getting out. I can always jump in later after I've cashed out on the profits and clear my mind. I still do from time to time fall in love with a particular trade where, quote unquote, I know it's going to go in this direction or that. If I want to have those specific rules in place that fit my specific goals, which hopefully in the end will prevent me from falling in love with the particular stock and riding it too far up or too far down and not following my specific rules. Of course, there's a human element always in these cases, and we'll see over the course of time whether that can actually be accomplished or not. Having the specific goals laid out, assuming that you follow them, the math works out. Of course, it may take 15 months instead of 12 for a stock to go up 50%, or the stock might just not move at all. That does happen, of course. But with these specific goals in mind, I've done the research ahead of time, taking a lot of guesswork out of it. That way, I have very little second guessing while I'm in the trade. The only time that I'd bail out is if something new happened with a company which voids my research and it no longer feel that it can move up 50%. Now, as you prepare to watch the next video in this series, write down some of your own specific goals that you have in mind for your own trading. Are you an aggressive trader? Are you conservative? Are you long-term focused, say 5 or 10, 20 years out? Are you short-term focused, like you want to purchase a specific item, like in my first example where my first computer? You need to have those ideas kind of on paper, what your end goal is going to be, in order to really dive into the how to set up your goals section. Kind of have those figured out ahead of time as you're waiting for the next video in the Trading with Goals section. But make sure, are you long-term, short-term? What are your end goals for your trading? Instead of just entering a trade just because you think you have potential to win it, is it going to fit your end long-term goals? And this will go well into the money management aspect as well. Once you have these goals set, your money management aspect will be much, much easier to do. You won't really have any questions on your money management just because you'll have your goals laser focused, and once you do that, your money management will be a breeze. So I'll talk to you real soon in the next video. Have a great day.